What is going on, everybody? Welcome back to the channel. In today's video, we're going to be going through two trades that I took using my simple intraday strategy. We're going to be covering everything from the technicals to the risk management to the take profit, where to put stop loss, literally everything you could possibly need to know in order to replicate this system and become profitable in the markets yourself. So if you do end up enjoying the video, all I ask is you leave a like below the video so that I know whether or not to make more of these types of videos. But without further ado, let's get straight into the video. Alright guys, so the first trade example is actually going to be on gold. If you guys don't already know, I only trade gold and GBPUSD. We're going to go through an example of a trade on each one of these pairs. So starting off on gold, I'm always starting off on the higher time frame, so in this case the daily, and then breaking it all the way down to the lower time frames for our execution. So in this case, gold for this whole year has pretty much been in this parabolic uptrend with, small pullbacks before then making another push. Obviously, this was also catalyzed and fueled by some of the geopolitical events we've had this year as well. But we won't get into that in this video. This is going to be focused solely on technicals. But recently, however, we did have this big sell-off. However, what we can see is that this sell-off came into this level and then started to reject after we swept these previous lows. So what I'm thinking now is that we have had this big sell-off, but price has taken out multiple lows, tapped into this imbalance, and we've also started to see this pretty bullish reaction as well. So that made me think that price is very likely going to head to the opposing liquidity at this previous daily high. On the lower time frames as well, we can see that price clearly broke structure. This was that initial hourly change of character. So this is when you're starting to think in terms of more bullish opportunities as opposed to before, where price was in this clear downtrend and we would have only been looking for sells. But at this point in time, now that price has clearly broken bullish, we are looking to buy up into that opposing liquidity at the previous highs all the way up here. So what I was doing at this point in time was simply waiting for an opportunity to go long. And if we played price on a little bit more, what I then saw was that price had made its way up, came into this imbalance to the left where there is no liquidity for it to react from. So it is very unlikely that price is going to reverse from this level. So I was waiting for a pullback into an area of demand. And what stood out to me was this candle right here. Very clear level of demand, which created imbalance. We had liquidity resting above it, and it also swept some previous lows in the market as well. So I was waiting for price to pull back into this zone. As we can see, it eventually did. And then all I was simply doing, I was on the 5-minute time frame, and I was waiting for a market structure shift or a change of character, whatever you want to call it. And eventually we did end up getting that. So as we can see here, price was printing a series of lower lows and lower highs like this. But once it came into that demand, we had price fell to close below that structure to the left. It instead wicked out. We then had a close above the most recent structure, forming a higher high. So very clearly now the structure has changed from this bearish structure to bullish structure inside that level of demand, after also taking out a lot of previous lows as well. So all I wanted to do there was basically wait for a retracement, because obviously you don't want to be buying all the way up here because the risk to reward won't be worth it. So I was waiting for an area where we could see price retrace into before buying up to the previous highs. And the level that I actually saw was based on the 15-minute. We had this candle right here, which was the one which basically caused this imbalanced move. So I wanted a retracement into this zone just to increase the risk to reward. I had stops just below this low right here, and I was targeting a 1 to 3. So for this strategy, most of the time my take profits are going to be set at exactly a 1 to 3. Just because using this sort of mechanical take profit rule helps to remove any discretion in the system, and it also helps to remove some human emotion from the execution part as well. So it means you're going to make fewer mistakes, and it's just going to overall increase your trading performance and make it a lot more simpler for you to execute consistently. So as we can see, eventually price does tap into that level after a retracement and then heads up towards the take profit. I think my stop loss was slightly smaller than this actually, because it hit a 1 to 3. So yeah, my stop loss was around here instead. But yeah, that was the fundamental aspect behind the trade. So once again, let's go and review that. We had sweeper previous daily liquidity, clear bullish structure coming into the market on the intraday timeframes. I then waited for a retracement into demand after price swept previous lows. I then waited for a 5-minute change of character, followed by a pullback, mechanical 1 to 3 target, and that is literally it. Alright guys, so moving on to the second trade. As I said, this one is going to be on GBPUSD, which is the other pair I trade besides from gold. So again, first thing we're going to do is go on the higher time frames and have a look at the overall market direction. In this case, we can see that price was clearly in this extended downtrend. So what I do before looking to enter any positions, I'll just mark on the current structure. So here we've had a break of this structure after price swept some of these previous highs up here. So your trading range is essentially between this high and this low, and that is where you're going to look to capitalize on the sells. What we can see is that price retraced, reacted from this sort of supply zone up here, pushed towards the lows, but formed equal lows right here, didn't quite manage to sweep the low. So what I'm looking for now is a pullback, and what I noticed was that we had this very clean level of supply. So I was looking for something like this, where we've now had price create that break of structure on the 4 hour. We reacted from supply, pushed down, created equal lows. So we know that people that are buying at this sort of level right here with their stops just below, because this is a support level. So we're looking to short down into this sort of level after a retracement. So I was waiting for price to come back into that supply. There we go. So eventually price came into that supply zone. There we go. I'm just going to change the color of this. And same with gold, and same with every single one of my trades. After this happened, I went down to the 5-minute. Again, we're waiting for that very simple entry confirmation. In this case, we can see price was printing a series of higher highs and higher lows. So the 5-minute was bullish like this. Once it got to this point, it swept the high and then created a lower low. If we play price on one more candle, there you go. So price has now created that lower low after this structure here was broken. So again, we don't want to be selling here because the risk to reward isn't worth it. We want to wait for a retracement into a more premium level. So what I did in this case was I identified this level of 5-minute supply, which was very clean as well because it swept that previous high to the left. If you guys don't already know and you haven't heard me mention this before, I've personally found through data that if you're trading based on supply and demand, the supply and demand zones which sweep previous liquidity to the left are higher probability. So if price retests into them, they have a much higher probability of holding compared to ones which don't sweep liquidity. So this area was high probability for me. I went ahead and set a limit on it. I don't ever like having less than a 10 pip stop, so I just set my stop loss at 10 pips. And again, mechanical 1 to 3 target. If you wanted a more discretionary take profit rule, obviously you could have targeted those equal lows down here, which is the whole reason we were basically looking for the trade in the first place. So we are expecting that low to get taken, but for this, I'm using my mechanical take profit rule of a 1 to 3. And as we can see, as price pulls back towards it, we get this very corrective pullback. Price is building up previous highs below that supply zone, taps into the supply zone, we get a rejection, and then price pretty much goes straight towards the take profit in around an hour or so. There we go. So once again, very simple trade, higher time frame direction and structure, pull back into higher time frame supply, 5-minute confirmation, 1 to 3 take profit, stops just above the highs. Every single trade is exactly like this, and it can be that simple, guys. All you need to do is just backtest this for yourself, collect data on it, and yeah, that's really all you need. So I hope you guys managed to enjoy this video. If you did, make sure to leave a like, subscribe for more content like this. Before I go, I also want to set you a quick task of backtesting this system for yourself, rather than just going away and blindly copying this system. You need to actually collect data on it for yourself, because you need to train your eyes to see it playing out in the live market. Because if you don't have the practice with the system and you've just seen somebody else do it on YouTube, it's not going to have the same result as if you were to backtest and collect data on it yourself. It's not just about the data, it's also about training your brain to see the setup, and yeah, training your eyes to see the setup in the live market and recognize when the setup is likely to play out, when it's not likely to play out, and all of these different nuances and intuition, which only comes from testing it for yourself rather than just seeing somebody else do it. So go away, do that, and let me know how you get on with that in the comment section below. But thank you guys for watching, and I will see you in the next one.